So today we've got a very serious video to go through. So right now, as a content creator, I see loads of different people's opinions on the YouTube scene through the comment section. And right now I can tell there's a lot of fear out there in the stock market. So today we're going to address a few of those issues right now. And I see a few people about to make a big massive mistake, if not if they've already made a big massive mistake. Now what is happening right now is there's a lot of stocks that are dropping. There's a few recent investments that I've made, and a few of those recent investments that I made have as well been down a huge amount. Now I've seen a few people that are reacting off the share prices. I've seen a few people especially get in the comment section and be quite aggressive on some of those investments, be like, that stock is down 20%, that's an awful investment. Or that stock that you bought 6 months ago is down 30%, that's an awful investment. So this is going to be a very serious video, and we're going to get into a big deep dive here, what I am seeing, and one of my big worries about what a lot of people are going to make a mistake in the stock market going forward. So hopefully this kind of addresses a few things going forward. So I hope it's a little bit useful, and we'll take a look. So first of all, I'm going to share this image with you. It's from Jazz Wealth, so go check their YouTube channel out. It's absolutely amazing. Dustin over there, I've been watching him for probably around about 3 to 4 years now. I remember when he was below 10,000 subscribers, and I think he's got over 100k right now, and it's because he puts fantastic content out. And this is one of the big, massive, fantastic content that he put out recently. Right now, we are in a fake stock market. You know, you look at, let me just exit off this video actually and just go on the S&P 500. Look at the S&P 500. It is doing absolutely amazing. Look at the run that it's been on. If you look at the S&P 500, it looks absolutely amazing. But the only reason why the S&P 500 looks absolutely amazing is because big tech is propping it up. The S&P is being propped up by 5 stocks, and they have a weighting of around about 30%. Because them 5 stocks are doing absolutely amazing, it makes the S&P 500 look like everything's fantastic out there. Now, when you dig into that detail, and Dustin put a great graph here, if you look at the average stock distance from the 52-week highs, you look at the S&P 500, we're currently, and this was taken from Friday, so it's actually even a little bit worse than what it's showing even right now. But you can see here the S&P 500, you look at what it's actually down of the average stock distance from 52-week highs, 11%. The NASDAQ comp, look at that, 3.6%, 39%. Look at the mid caps, down 4.6%. You look at the average weighting, it's actually down 16%. Small caps down 6%. The average weighting down 22%. Same for the NASDAQ, you can read that there. What you'll see here is when you actually look at the average stock distance and you actually take the weighting out of the tech stocks that are propping up the stock market, you actually see realistically what a lot of these indexes are doing. You look at the indexes, best case scenario, they're in correction mode. If they're not in correction mode, they're they're pretty much in crash mode. You know, a lot of these stocks are down over 20%. And if you aren't invested, any stocks that will have been your best performers this year, it's the same for me are the likes of Microsoft, Facebook, Shopify. The big tech have been holding up the stock market portfolio up. If you look at anything outside of the big tech, you will see it's down a massive amount. So even though like the S&P 500 looks like it's absolutely amazing, if you dig deep into there, you will see there's a lot of stocks down a huge amount. And I'm sure if you have any of the stocks outside the big tech, you will feel it. I have stocks that are outside of the big tech, and I can tell you, especially that small market caps, which if you look back here, which is the one that's actually down the most, in particular, definitely feel it in the stock market portfolio. So first of all, just remember, we are in a stock market that is a little bit lying on the indexes. We are in a stock market that is having a lot of stocks are having correction modes or going into crash modes. So that's the big thing is, first of all, think about the market conditions that we're in. It's not just a certain few stocks. There's a lot of stocks down a huge amount, and it's being covered up by the indexes at the moment. Now, the next thing you can say is that drops happen in the stock market. I know it's hard to imagine because we've been on such a good run since March 2020, but right now there's a lot of negativity out there. There's a lot of negativity saying, oh, this stock's down, it's a bad company. And a lot of people are judging a company off because of that share price drop. And a lot of people are investing into a lot of stocks and thinking, oh, I bought this stock 3 months ago and it's down 20%, and that means it's going to be a really bad investment. A lot of people are making this mistake of judging an investment, a long-term investment, over a short amount of time. They're looking at a lot of the stocks and going, these stocks are down, it's a bad investment right now. Now, realistically, if you are actually a real investor, if you're a real long-term investor, you will know drops happen. Drops will happen in the stock market. Now, the stock market has been fantastic the last kind of 12 months. You've probably had some really good returns. You've probably taken some really good profit like I have. But at some point we do have to have drops in the stock market. It is part of the game. It is part of the game that you have stock markets that go up. You have the part of the game that the stock market will go down at point of view. Now you can't get too disheartened because you have a stock that goes down. More than anything, if you have a stock that goes down, that is normally a really good buying opportunity. The best time to make money is when stocks go down. You know, if you look at all the stocks that are down in that S&P 500, you can't tell me that there's, you know, over 250 stocks way off the 52 close. In that, there's going to be some really good buying opportunities, and them really good buying opportunities will probably make you more and more money. You know, you probably look at the, if any of you guys were in the March 2020 dip, it was pretty awful at the time, but when the stock market went down, all these stocks that went down, they weren't terrible companies. There were some fantastic companies on sale, and you could have picked some companies up in that March 2020 dip, and you would have made fantastic money on them. I'm sure if you were there, you would have made good money on them. I made good money on them. Dips are the amazing opportunities. So just because you're invested into a stock or that stock goes down a fair bit, more than anything, that share price might not be reflecting the company that's going on there. It could be actually an amazing investment, and that's the big thing you got to realize. A dip can normally be the really big thing to capitalize on to make a lot of money. And the next thing is a history of, I'm going to show you now a history of dips that I bought. Now, quite often there has been plenty of investments that I have bought, and I've looked at the share price and gone, oh, this is quite a good opportunity, I'm going to buy that stock. And then I make that investment, and then the stock will go down 10, 20, 30%. That can happen when you make an investment. When you buy a stock for the long term, it's pretty much a 50-50 shot in the first 12 months if it goes up or down. Now, if you're in a bull market, that chances of it going up are probably higher. If you're in a bear market, the chances of when you buy a stock will go lower. That's what happens in the stock market. You look right now, we're in a bit of a bear stock market. So because of that, especially when you look at the small caps, if you are buying any more small caps recently, what you probably realize is that when you buy it, them stocks are going down. It happens. I have bought plenty of stocks before, and I buy them, I go down 10, 20, 30%. Is that a major thing? Does that mean I've made a bad investment? Does it mean I've bought a bad company? No. And quite often when I do buy them investments and it does go down, I'm actually really happy. The reason why I'm really happy is because I can then average into that position. I get my average lower and I make more money in the long term. Just because my investment that I've started buying goes down in the first 3, 6, 12 months, just because it's gone down in 12 months, doesn't mean it's a bad investment. You've got to remember, if you're a true long-term investor, you are not judging that investment over the first kind of 3, 6, 12 months. You will probably have written down what you see the company doing, progressing financially in the next kind of 2, 3, 4, 5, even maybe beyond that 10 years. You've probably planned out where that's going. And when it's in the short term, anything can happen. But in the long term, the share price will move in the right direction. And just because it's in the short term and it goes down, it doesn't mean a bad company. And the big thing is, like I said, what I was just about to say earlier, is that when you go down on a position, that not only means you can average with that position. And if you average down on that position, it means in the long term, you can make more money. Because if you think where the target is still the same, because it's gone down even more now, you make money. So being down on the short term is not a really bad thing. And the big thing as well is like my history of buying stocks and they go down in the short term. If I buy a stock and in the first 12 months it loses 20% of its value, it actually normally is one of my best performers because I average down on that and I make even more money in the long term. So I'm going to show you this right now. So let me show you this stock. You might have heard of it. It's a stock called Tesla. So I bought Tesla in 2019, a stock that I started buying quite a bit in 2019. I mean, it was on a little bit of a share price dip. I thought, you know what, I'm going to buy this. Could be a really good stock in the next few years. Now you look at Tesla now in hindsight, if you know the outcome, obviously it looks like absolutely fantastic and it's done amazing. Now, if we just flick back to 2019 before I made a lot of money on this investment, right, let's just go from here. So if we just go from start of the year, 2 months in, down, it's in the red already, down 10%, down 16%, down 25%. Okay, so we're starting to get towards half, look at that, 30%, 41% in May. So you've been in this investment for 5 months. You're down 41%. So what? Okay, you just keep buying, averaging in. If you believe in the company, you're not investing for the short term. You're thinking where it's going to be in 2020, 2021, 2022. Okay, so you keep going lower and lower. Okay, you're down. You're now over half the year. All you've done is seen red. You're down 20%. Okay, we're getting towards now the back end of the year. You're still down 20+% on this investment. Okay, and it takes nearly the whole year, okay, before you actually start seeing any positive investment with Tesla stock. Okay, even if it wasn't at the start of the year, if it was at other points, if it was middle of the year, for me personally, when I bought the stock, I spent basically that whole first year of investing in Tesla, with me being down on that position, there was points where I was down 30% on Tesla. At no point, because I had done the research on the company, I looked at where the company was not going to be in 12 months time. Okay, it's like right now, there's some stocks that you might have bought. There might be some stocks that you bought and you're down, the first kind of 12 months. There might be some stocks that you bought in the first 12 months, you're down on that position, right? But just because you're down on that position in the first 12 months, that does not decide if that's been a successful investment in long term. You've got to have the vision of if you are a true long-term investor. So you look at this one here, 2019 was a year that I bought Tesla. I was down on it for most of the year. Now what happened after 12 months? After 12 months, boom, we start going in the right direction. Oh, we're up over 100%. Okay, we started going even longer, we're up over 1,000%. And that's one stock that I bought. This is a Tesla's a stock that I bought, and I was down 30% on. Didn't panic, there was a lot of negativity out there. At the time there were people saying, oh, Tesla's going to go bankrupt, they're never going to make profit, Elon Musk is going to quit, he's in trouble with the SEC, he's going to get sacked from Tesla because of some of the comments that he made by the SEC. The Tesla factory is on fire, they can't make the cars, there's production issues, there's stopped production. Millions of stories, millions of stories on this one. Pushed the share price lower and lower through 2019. At no point did I panic, because I remember I'm a long-term investor. I'm thinking where this will be in the future, and look at that. I benefited from that going down 30%, bought more shares, averaged in, made more money. Okay, so that's a very big prime example here. Next up, iRobot. So I started buying iRobot as well in 2019. A lot of issues because of tariffs with China. Tariffs on China was going to affect a lot of their supply chain issues. You'll see here that what happened with iRobot, it was a $127 stock. The stock started going down. Eventually I started getting really interested around this stock around about this sort of period of time. Now obviously when I started buying this stock in this period of time, all that kept happening is I went lower and lower and lower. People would call you catching a falling knife. All it keeps doing is going lower and lower. Okay, I looked at this and think it's a good valuation. It kept going lower. I'm down 30% on the company. Just kept believing in it, averaging in. I think I'll make good money on it. Same again, by the time I bought this company in the summer, what had happened to this stock is that I was down, classic, 30-40% on this position. All that happened is I kept averaging in. What happened from here? Stock goes up round about, all the way up here at this sort of time. Now, personally for me, I got my average, I think around about to $50-ish or something like that. $45-ish by the time I'd finished buying. Eventually I ended up taking nearly 100% return on this one, as a lot of you guys would have known if you've been following the channel. So this is exactly another one, buying, average down, it's just a company getting cheaper and cheaper, gives you more upside and make a good return off it. Pinterest is another stock that I started buying. Started buying this one in around about 2019 here, as you can see. I actually don't think I started making videos actually to the start of 2020 with it, but Pinterest was a stock that IPO'd. The stock IPO'd, it started going up in a lot of value, and then after the IPO, the stock price started falling off a cliff. Got around to like November time, did start to really interest me. I think the earnings kind of spooked the stock and it started going down. So I started buying the stock in 2019. Now, very quickly, what happened with that stock is I was down on that position very, very quickly. And, obviously straight away, you're down 20-30% on that position. What happens? Goes lower, especially when we get into the CV time. At the CV time, at peak of this, I'm down over 50% on this position, right? Well, technically, I wasn't down 50% because I did do a little bit of averaging in. I think I was down about 40% or something. Down a huge amount. Just kept buying the company. What happens? Eventually, people realize, oh, you know what? We looked at the revenue growth, we looked at the profitability, stock goes on a crazy run. I sell half my shares off at 200 and 300% profit. Exactly the same again. Stock, buying, think it's a really good opportunity, will be a very good company, it grows revenue and profit. We get the rewards later down the line. So this is an investment once again. You buy the stock, it goes down, average in, make more upside on the company. One that a lot of you guys would have been through, Greg's is a stock once again, started buying this one, let's have a look. I started buying this around about May time. You can see here when I started buying this company. A lot of you guys probably will be following the channel then on this one. You start buying the company, I think it's going to go on a really good run. Think okay, most of the CV stuff's behind us. What happens to this? Now this wasn't down for as much. This was quite a short period of time, but within a kind of half a year period, you can say like, oh, you're down, 30+% on this one. Once again, just keep averaging down, stock goes up. Now, obviously, if I bought from that point and just carried on holding it, I still would have benefited from it. Even if it wasn't the lowest point, I still make, a good 60% on this one. But what I kept doing is averaging in. Eventually, I can't remember my average on top of my head, but I'm currently up 115% on this one. So, this is one that a lot of you guys would have gone through. GWPH, June the 8th I posted this one. Originally I think my average was about $140-ish. So you can see here that it did kind of fall off a cliff here. $140, went all the way down to $100, went all the way down to $87. Was basically, you look from when I started buying it, basically had a year and a half of this stock doing nothing, and boom, someone realized, oh, we need to buy this company, took 100% return. Especially when you get this negativity, when the stocks are going down, is when you get that peak negativity out there in the stock market. I mean, just look at this comment. There's a lot of them that have been deleted at the time, but there's a fair few comments on here that were basically saying, oh, this stock's terrible and all this. Unfortunately, yeah, Fuzzy Z Balls hasn't really deleted his comment, but you just read that there. Basically a lot of trash talking on me, on the company. It's a company that loses money, you don't know what you're doing. Look how that one worked out. The stock goes up, and every single video here that you see, there was times where I believed in the company, I know what I invested in, and it's even tricky for me because I've got to make sure I build up a really sound investment on this, because when I buy investment, it's very different. I'm here when I buy these investments, I've got to make sure that I'm 100% confident on it, because I'm not just buying it for myself. I've got to then do a good 30 minutes deep dive on YouTube on it, and I know that even though I tell people that do your own research, I know this is obviously always going to be tied with me when I come basically on YouTube with it. So when I'm bringing the video about Tesla, and it starts going down, took a lot of stick publicly for that one, but because I know what I was investing in, I believe in it. Look how that one worked out. The likes of iRobot, Pinterest was another one. Greg's, I can't even tell you the amount of stick that I got from Greg's when Greg's kept going down, and there's a lot of new investors at the time like, oh, you pick this stock and it just keeps going down, it's down and down, it's down 30% now. But you got to have that long-term goal, and this the thing is with this one, it's not even that long-term really. We're only really a year and a half into that one. That I wouldn't even argue that this is fully played out now. I would say when we get to the 2 to 5 year mark is when I would judge the investment if it has worked out, and obviously everything right now looks like it has worked out. But even then, I would still say that it's in a short-term period right now. So I thought I'd just talk about that. Just the history of drops. Drops are always. The thing is, we've had a stock market that's gone up for so long and everyone's happy, everyone's going, oh, this is going up and making good money. Now we have a test where the stock market rotates, and we have a stock market that is starting to show a few little drops out there. And then sure, the drops in the short term are a little bit ugly, but if you're judging an investment, if it's been successful or not over 3, 6, 9, 12 months, you're going to struggle. If you're a true long-term investor, you need to be planning out what it's going to do in the next kind of 2, 3, 4, 5, 10 plus years. You've got to look at a long-term point of view. And if you're buying an investment in that, and you will have it, you will have, when you buy a new investment, there's a good chance, 50-50, them stocks go down. I've just shown you plenty of stocks that have gone down there. You can't lose your cool just because, oh, that stock price has gone down after I bought it, so that means it's a bad investment. You will only know if it's a good long-term investment when you get to the 2 to 3, 4, 5 year period. If you're judging it off the first kind of couple of months, you are really going to struggle. And like I showed you earlier, most of the time when you make a lot of investments, if you make an investment and that investment actually goes down in the first couple of months, quite often, if you believe in the company, you will believe you have more upside. And if you have more upside, you will be like, oh, it's gone down. I'm down 30% on the position. So what? I'm going to buy more. I'm going to average in. I'm going to make more money. And when that investment matures, and more than likely, hopefully it's a good investment, when you're up over 100%, that being down 20-30% really won't seem that much really. And that's a big thing you got to remember. So I think that's the big thing I'm going to say here. You got to remember, first of all, don't get too upset if there's a few certain stocks that are down that you are investing in, because you got to remember right now, it's not just, a couple of stocks. There's a lot of, when you look at the average weight, if you take an average weight in a 52 close, there's a lot down there. Next of all, drops happen. You might be one that you forgot about over the last few months because we've had a stock market that's gone crazy. But stocks do go down, and there's a good 50-50 chance that when you do buy a stock for the first couple of months, it does go down. If every time I judge the investment over the first 3 months, won't be a very good investor. I'll tell you that right now. I won't be very successful. You know, that's the big thing you got to remember. And once again, when drops happen, those are normally the really good buying opportunities as well. You know, even if you do buy an investment and it goes lower, you should be really happy about that if you do have a really good belief in where it's going to be in the long term. And last of all, they're just a history of drops. You know, I've seen it a lot in, like I said earlier, you know, I'm a bit advantage here because I get to see the whole kind of feeling out there in the stock market, and you know, I get around about 1.5 million views on a year basis on the YouTube channel, and I've seen recently, like, just the more we kind of go on through this process, I'm seeing a few more comments that are a little bit more aggressive, like, oh, this stock's down, this stock's down. I got a comment yesterday. It was like, oh, you know, all these stocks are down, you know, so much. So what? You know, if you just name them stocks, those are all, you know, new investments. They're all new investments of 3, 6, 9, 12 months. That's not really how you judge a long-term investment. You don't judge a long-term investment over the first 3, 6, 9, 12 months. If it gets to, you know, 2, 3, 4, 5 years, and then you look at that investment and you go, okay, it's down 40%, that's probably not a good investment. But it's a reality. You know, we've had a stock market where you've been able to buy a lot of stocks that just carry on going up. But we are kind of getting back into a bit of a normality, probably even a bit of more of a bear market, where there's a lot of stocks that you buy in that they'll go down a little bit unless you're buying a lot of the big tech at the moment. And the big thing is, you know, like I said earlier, the big opportunities come on the drops. You know, the big way that you can make money. If you're buying Apple and Microsoft at, you know, 40 times earnings, the chances of making you money on that on the long term are probably still okay. But there's nowhere near buying a solid company that has just lost half its valuation in 3 months. If it's a solid company and it's going to do very well in the next kind of 5 years, and it's just lost half its valuation, that's a massive buying opportunity out there. And there's some out there. That's what you got to look for. And if you can find them, you'll do very well. Okay, you know, like what I showed you earlier, you know, the amount of companies I showed you earlier that at the time people were slating them companies. They were saying, oh, it's a terrible company, it's not doing this, it's not doing that, that's why it's lost half its valuation. I've just shown you a plenty of companies there that I invest in that at the time people were saying, oh, because the share price is down, it's a terrible company. Well, the share price might be down for the next kind of 3, 6, 9, 12 months. In the long term, that's a fantastic long-term investment. And that's what you got to look for. So before I make it that video, just talking about the stock market in general, just a few experiences that I have, and especially a little bit of just me coming out here and just, you know, being a little bit more serious, because like I said, I've seen a lot of negativity out there recently. And you know what? If you look at a share price right now and you look at the share price of a recent investment, sure, it might look like it's not working out, but at the end of the day, you know, if you're a true long-term investor, you can't judge an investment off a, you know, 3, 6, 9, 12 month period, because if you do that, you're not going to be very successful. So yeah, hope the video is useful, and I'll see you in a bit.